Welcome back to our conference. We are changing a little bit the subject now to a new panel. We are discussing now Fintech regulation in some of the major Fintech verticals. We will try to discuss crowdfunding. First of all, in the vertical of new marketplaces, we have payments and innovations in payments, and the discussion about the infrastructure vertical on the subject of outsourcing, which, as we saw in the previous interventions, is a hot topic in this context of Fintech regulation. It is for me a great pleasure to introduce you Professor Eugenia Macchiavello, who is one of the major reference in the discussion of crowdfunding, financial return crowdfunding. She authored several very well-known research papers on the European crowdfunding regulation. And so it's very good to have you here. Professor Eugenia Macchiavello is a professor at the Genoa University, and she teaches financial regulation, alternative finance, and I believe that has interest as well in the intersection between ESG and ESG objectives and Fintech. Professor Machiavello will speak about the licensing principle and investment-based crowdfunding. The floor is yours, Professor.
Thank you very much, and thank you for inviting me to join this conference. It's a great honor, and I also thank the organizers, of course, but also the panelists before me, because my idea for today's presentation is, of course, to discuss crowdfunding within the main topic of the licensing principle. So I will like to discuss first to what resembles investment-based crowdfunding, and then also focus in particular on the recent European crowdfunding regulation that has been mentioned. So we have discussed before that we have long chains, a lot of intermediaries in the capital markets and both bankers and investment firms, etc. The idea of many alternative finance intermediaries is the idea to cancel everything and just put in contact investors and firms. Of course, this is a claim. We need to check whether this corresponds to reality. And as regards, in particular, investment-based crowdfunding, we have these platforms that allow investors from one side and entrepreneur from the other to connect. And in particular, entrepreneur launch an open call for funding to internet users with specific reference to projects, and they solicit the investment in either shares, that is the main product, or that-based instruments or investment contracts with, for example, profit participation, and in different countries these are classified from a legal point of view in different ways. Generally, and compared to the classic traditional markets, we have small amount per investor, so sometimes in a project we have an investment just of 50 or 100 euros, and not like in many traditional ones, larger amounts. So what do crowdfunding platforms do? What is the role? So it's not just as they present themselves as a marketplace where investors and firms interact, but they also admit entrepreneur to the platform, so they kind of pre-screen. There are different business models and also different techniques and due diligence criteria, but they of course publish the project that have passed this first pre-screen, and then sometimes they also support firms in presenting and publishing their business plan, but also provide contracts that then will be subscribed by both firms and investors. They facilitate a communication among the two, and sometimes they also deal with payments, of course, transfer of money between these types of users, but this is not always the case. They can rely on a third party. So what is this? Is that can we classify this within the traditional categories? It's probably will be discussed later. Maybe with peer-to-peer lending is more difficult. With investment-based crowdfunding, the idea is easier. So as you can see, within the principles that we have just discussed in previous panel, so technologically neutral and same activity, same risk, it's quite easy to reconnect crowdfunding to investment firms. It's not, of course, banking, insurance, or other, but it's easier to reconnect at least to investment firm area. But do we have the same risk, the same features? So can we just use, for example, MiFID II as it stands, or do we need adaptation or create a special regulation? That is what we have been dealing, regulators have been dealing so far. So sometimes the answer is varied, I will show in a moment, but the idea is that actually investment-based crowdfunding is riskier than traditional investment process for various reasons. One is that they generally, the investment is in a seed or early stage company, so definitely riskier because they don't have a track record, and so they are not very appealing for the traditional public markets, and it's really illiquid. For the first years they do not generate returns, and it's not easy so to sell also, and there are not markets for these shares, and there are not traditional underwriters and all the chain that I've showed before, so also the pricing of these companies, it's definitely not an easy task. But of course there are also advantages, and what has been also discussed before also by Professor Zeske is we also have to take into account advantages, otherwise we will just prohibit everything that is new. So the advantages, especially for firms, is that otherwise these companies do not receive enough financings. For the reasons I said before, they are generally cut off from the market. So we need somehow to provide funding, even if it's through alternative way. And in addition, crowdfunding is also used for other functions. So entrepreneurs use crowdfunding also as a market test. So if they can receive funding, probably the product they want to produce will also receive a good market response. So if the funding instead fails, maybe they need to reconsider how they will produce the product, etc. And of course can also leverage other financing. If they obtain through crowdfunding, they might obtain also other investing from the public market. As regards systemic relevance that has been also mentioned, of course here we have need of investor protection, but we don't have the kind of investor protection may be connected to the confidence and so systemic risk for the fact that so far, if we invest through a crowdfunding platform, we do not expect the same protection, but this may change, as might change the systemic relevance per se of this market, since so far it's very small compared within the great alternative markets, so including also peer-to-peer lending, invoice trading, etc., is very small. It's 1% of all alternative markets, and probably near to 0% compared to the general and official financial markets. But what about the features? Because maybe we want to have something similar to investment firms regulation, but considering the particular features, we might want to adapt and therefore change a little bit all this. We have the fact that, as I said before, this platform perform investment services, but which one? I will discuss later on that it's not so easy to identify. But the investment process is also sometimes particular because investors, for example, do not invest only for a financial return, sometimes also for a community sense, and they decide based not only on financial information, but on pitches and closeness to their community interest, etc. So it's kind of hybrid model sometimes, even if it's probably moving to the more traditional way of investing. So can we apply MiFID II? Member states have decided in very different way. The approaches range from completely unregulated, so no license principle. we can rely on general civil law or consumer protection laws, etc. In other cases, we have application of a special regulation. In other cases, application of MiFID and everything in the middle, because there are a lot of variation. But why there is uncertainty on apply MiFID or not? Because sometimes the shares that we are investing in are of private limited companies, and in many countries these are not considered financial instrument transferable securities, and so not subject to MiFID II or the national regulation implementing this directive. And also, as regards investment service, member states have decided as qualified these services offered by the crowdfunding platforms in very different ways. So the usual is reception and transmission of orders, but some countries have seen it also possible as investment advice, since through the platform they propose, even if it's not really personalized, but they propose a suggestion to the users. And of course also some kind of markets matching interest, and especially when there is also kind of bulletin board or secondary markets involved for making it more liquid. Sometimes the qualification as investment advice or reception and transmission of orders has also allowed the use of an exemption from MiFID, and so no application of this license and all everything attached. And the same for prospectus regulation if under the threshold, relevant threshold. So the countries that have decided for a special regulation have adopted, created generally a new authorization, a new intermediary, but of course using the principles of MiFID. But I think it's more important to move to crowdfunding service provider regulation that takes a lot of inspiration from the member states' regulation. So the idea is what we have discussed all the panels before, and especially in the capital markets area. So create a license for these new platforms, a special one, but inspired to MiFID and so taking some inspiration from that, but adapting, considering the features and characteristics that I mentioned before of the same. So we will see something similar but new, and the idea is assessing whether this is coherent with all the principles that we have discussed. So also create a European passport, so obtaining the license in one country allow you to offer your services in all others, and I mean through an online platform, so you can reach a lot of people, not creating branches, etc. What is the structure of this regime? As you can see, is similar to what we have already discussed. We have organizational requirement with a particular focus on conflict of interest. We have even prudential requirement. This has been added during the negotiations. At first, the idea was because of no systemic relevance, etc., we don't need prudential requirements. Instead, this has been added. But the main focus is also on conduct requirements and disclosure for investor protection. And in this regard, we will see that the regulation creates a new category of retail investors called unsophisticated investors. This is a category within the main retail investor category, and I will explain later why, and to ensure them an increased protection and new instruments. But then we have an additional block of rules that also pertains to particular models considered riskier and more complex. I will not talk about this for time concern, but one of these concern investment-based crowdfunding, that is also pricing of debt instruments, and in this regard there is additional organizational disclosure requirement also for the reliance of investors in this regard, and we have mentioned this also as regards also credit rating agencies. So once the platform provides the investor with information on an evaluation of the products, then there is more reliance and therefore more rules. So the regulation classifies the investment-based crowdfunding activity as reception and transmission of order in combination with placing without firm commitment. So here the idea was it's not easy to fit crowdfunding within only one investment services, so let's combine the two. And also the regulation does not reflect completely reception and transmission of orders as in MiFID, but we have a kind of mix of the rules. But what are the instruments that can be that you can find on the platform? Transferable securities and admitted instruments. What is this second category? Again, it's new. It has been created to cover also limited shares of private limited companies that I said before are not considered transferable securities in many countries. So the idea was let's create this new category to cover also this kind. But of course, as I will say at the end, it's challenging because the national competent authority will decide whether a particular share of private limited companies can be considered admitted instruments. So again, we will have member states diverge about whether the crowdfunding regulation apply or not. And the total consideration is 5 million, so different from the at least maximum allowed under the prospectus regulation to reach a compromise. So we will see this regulation is lighter compared to MiFID II and prospectus regulation, but on the other hand, you have also more constraint in the kind of activity, only these two, the other activities are prohibited, and on the other side also the amount. But let's see the authorization requirements. It's very similar to what we are used under MiFID II, for example, but again simplified, and so also faster, and also again the importance of have a fast process has been already mentioned in the previous panels, and there is no minimum capital requirement that instead generally is present in other There are also requirements from the point of view of the organization, also outsourcing and conflict of interest have been mentioned, but on the side of general rules, we don't have, for example, product governance requirements, and we don't have governance requirements that are generally strict and very detailed. This is under the basic model, at least, of the regulation. It's definitely liar. On the side of conflict of interest, under the assumption that they are neutral intermediaries, instead there are additional rules, so prohibition to participate, have a stake in the offer, and have manager, relevant shareholders invest. They can invest but not present themselves as project owners. Prudential requirements, as I said, has been added. But compared to MiFID II, we have a lower level. So we have 25,000 instead of the minimum under different categories. But for reception, for category 3 of firms is 75,000, and it can be satisfied with a combination of common equity tier or insurance policy, or only one of the two, so flexible, more flexible than under existing regulation. And the conduct requirements are again quite similar but simplified. And disclosure duties are the ones that are more important, because we have a lot of information requirements are on the issuer, not on the investment platform. But interesting, the most important aspect is the key investor information sheet, so the document that needs to be released to the public, and this can remind you about a prospectus, but it's not a prospectus at all. It's only 6 pages short. There's no authority approval, and is prepared by the project owner. But here, interesting is the crowdfunding platforms that substitute the authority and needs to check some of the aspects that have been mentioned in the first panel. So it's the platform that needs to verify the completeness, clarity, and correctness of the document. What you mean with correctness? You cannot find this term in any other regulation, so it's not clear what it's meant. It's not a complete correspondence to the truth of what the project owner, the issuer, says. So we will see how it will be interpreted, but it is a very important aspect. Protection of unsophisticated investors, that, as I said, are the ones that do not have a lot of experience, and we don't have an appropriateness test as we know it, but we have a knowledge test. That means that you need to verify the knowledge of the experience, and a loss simulation test that you need to verify whether the investor is able to bear losses corresponding to 10% of his net worth. These are very weird tests, because do not verify at all the real knowledge or the real ability to verify losses, but are quite costly for the crowdfunding platform, because they need, based on the regulation, to obtain information, for example, also on the financial situation and investment objectives, so as under a suitability assessment, but then with this information you do not provide any feedback to the investor. And another particular thing is, even if you have a negative result from this test, you can still, as an investor, keep investing. So there's no obstacles. It's just you are warned that you need to be careful, but you can still invest. And in addition, you have a reflection period, and again, warning if you go above. So all this is under the responsibility of the crowdfunding platform. So to conclude, it's difficult to verify whether there is same risk, same activity, and same rules, because, as I said, we can find some aspects that correspond to MiFID II, some others that have been changed with the idea of make the regulation and the license for this crowdfunding platform lighter. But sometimes it's not easy to understand whether it makes sense to have that particular rules and so have less cost on platforms and less protection or otherwise. Another aspect that I want to underline that has been mentioned is that the regulation so far does not mention at all sustainability, ESG, etc. There's an article requiring the Commission to evaluate in the next year what to do with that, because of course, again, we have a problem, costs, protection and sustainability, that we have to balance all this. And finally, also the evaluation, whether we have something similar to what we have in MiFID and prospectus, comes also with a warning that a lot of aspects in the regulation are left to member states, so we will have to wait also for to see whether member states will interpret this regulation. For example, civil liability of platforms is left to definitely to national law. So this is kind of important to see whether we have a gatekeeper, a light gatekeeper, or what. So this is my last slide, and the idea is that the effort by the EU has been to create a regime that reminds MiFID II, but trying to pick up only the aspects that were considered essential, and on the other hand, that could protect investors. So probably from a licensing principle, we have less from requirements from organizational point of view under the basic model, but more on investor protection, but with solutions that, as I said, need more clarity while being applied. And at the same time, we need to verify in a few years whether this new regulation and license will also make this crowdfunding platform converge towards traditional intermediaries, and so we will need to move again more towards MiFID II, etc. So I thank you, and I also refer you to an upcoming book where also Professor Diogo Pereira Duarte is participating, and others. So a commentary on this European crowdfunding regulation that will be issued, I think, by December 2022. So thank you very much for your attention.
Thank you.